Hey folks, welcome to our annual KPIX Facebook Live Tax Call-In. I am Julie Watts, and we have gathered the experts from the IRS, the Franchise Tax Board, and H&R Block to answer all of your tax questions today. I want to introduce our guests. If we can go over here, we'll take a look at our expert panel. First off, we've got Jason Montiel from the Franchise Tax Board. All the way to the left here, Scott. I've got Scott behind the camera. Behind him, Rafael Tulino, and Arlette Lee is around here somewhere from the IRS. And we've got Louis Ruff from H&R Block. Over on the other side of the room, we have gathered a panel of experts from H&R Block. They are manning the phone lines. If you have a tax question, you can call in right now. The number is 888-5HELPS-YOU. You can speak live to one of our tax pros, or you can, of course, post your questions on our Facebook Live in the comment section below. We've got experts from H&R Block actually responding to those questions as well, and we will be talking to our in-house experts live here on Facebook. I am just going to pull up our Facebook Live here, if we can do that, and that way we can see your questions. It says we've got to update to our Flash player. I don't know that we want to do that. So we're just going to go ahead. Technical difficulties. This is the beautiful thing about Facebook Live, folks. You never quite know what you're going to get. So I'm going to rely on our team to tell me what the Facebook Live questions are coming in. Just refresh the page. Okay, let's try refreshing the page. And while we're doing that, why don't we have our first guest come on up here? That's going to be Louis from H&R Block. I do want to know, if you're posting your questions on the web stream, please be mindful not to post any confidential information. We don't want to see your social security number or anything along those lines. If you have a very personal question, you can go ahead and, I'm still not seeing it here on the stream, Carlos. You can go ahead and call 888-5HELPS-YOU, and you'll have our tax experts from H&R Block answering your questions live. So I'm just going to go ahead and skip this here, and I'm going to have Carlos sort of feed me the questions as they come into our Facebook page. In the meantime, sir, why don't you have a seat? Thanks so much for joining us today, Louis.
You're welcome.
So we have a lot of tax questions that we got in advance, and of course our tax experts, well, they know the questions that you guys are getting at H&R Block. So let's talk first. You know, a lot of the questions we're getting are about the tax changes this year. The tax law has changed, and folks want to know how it impacts them. And we hear a lot of acronyms, things like SALT and AMT. So let's start off with the tax changes. And first of all, there is a change to SALT. What is that?
Well, SALT are state and local taxes, and you can presently get a deduction if you pay state and local taxes. That includes your property taxes, that includes any payments that you made to a state in the last year, or that was withheld, for example, from your W-2. And then you get a deduction for the full amount of that if you itemize your deductions. But now the law has changed.
So what do people normally get? What was the normal deduction? So now the law has changed to a $10,000 cap, but say last year, what were most people deducting?
Anywhere, any amount that they're over that $10,000. You see, if it creates an itemized deduction situation, you can deduct any amount of taxes that you pay.
And for people who don't know a lot about taxes, what is an itemized deduction? What's an example?
Well, that's an example of a special expense that you had, like property taxes, like interest that you pay on your mortgage, also charitable deductions that you make, and things like employee business expenses or casualty losses. All of those things can become itemized deductions, and if they add up to more than the standard deduction, then you use the itemized deduction.
What's the standard deduction?
The standard deduction is what any taxpayer gets, and if you are a average taxpayer, if you're single, for example, you get $6,300.
Okay.
If you're married filing jointly, you get $12,700.
Okay.
Of a base that you use. Then if you have more deductions than that $12,700, for example, then you can deduct those and get a greater tax benefit.
So for instance, the wildfire victims, that would be a deduction, one of those itemized deductions?
That's a casualty loss that could be taken into account on your Schedule A, which is where you put the itemized deductions.
Or if you work from home and have a home office, your home office expenses are itemized deductions.
Exactly.
Okay, so now this year the big change is no matter how much I have, that's capped at $10,000?
Exactly. I had a client just this week that paid $59,000 in itemized deductions just for taxes. Next year, they're going to get a $10,000 deduction. So it's a huge loss for some taxpayers, particularly those on the East and West Coast.
So, right, folks in the Bay Area and in California where we are. Okay, but then I'm hearing that it's not necessarily all bad news because there are changes to what is called the AMT, the alternative minimum tax, which may actually counteract what we're losing on the SALT, the state and local tax. So tell me, first of all, what's AMT? What's alternative minimum tax?
Alternative minimum tax is a different way of figuring taxes for those who make higher income. Say, for example, now if you make $80,000 or more, they have to look at your taxes again in the same tax preparation time to see if maybe you owe a higher AMT. It's a way for the government to get back some of those tax breaks and benefits that people typically get who have higher income.
So if I make more money, let's say I make $200,000 a year, me and my spouse together, and we have a lot of deductions. We want to deduct our mortgage, and we have children, and I'm trying to think of some other things. We have a home office, and we come up with maybe $50,000 in deductions. We would have to pay the alternative minimum tax and not the basic tax because we're higher earners and we have a lot of deductions.
Exactly. But the good news is, if you are subject to AMT, and about 50% of taxpayers who make about 200 to 500,000, that's 50% of the people who pay AMT.
Right, and that's households. That's not individuals.
Total household income, exactly.
Which is still very high earners, obviously. That's not most people.
Yes, it is. But that alternative minimum tax now is not going to contain so many state and local income taxes. That's one of the biggest factors in having to pay AMT, is you have high state and local income taxes.
Okay.
So basically all of the clients that I have this year who have to pay AMT, we have an estimator at H&R Block where we estimate what their tax burden is going to be next year under the new tax law.
Right.
And virtually every single one of my clients that has to pay AMT this year doesn't have to pay it next year under the new tax law because of those lower state and local income taxes.
Now, these are two of the big changes for the tax law, and they primarily impact higher earners, right? So folks who make over, say, $200,000, but everybody who has a child can benefit from the changes to the child tax credit, right? And that's another big change. What's the change there?
I think this is going to be one of the happiest changes for many families in America. Because now you can get a child tax credit. You can get $1,000 credit, cash money, if you have $110,000 or less in your income if you're married filing jointly. It begins to phase out at $110,000. It goes completely away at $130,000. So if you make $140,000 as a household, you don't get that $1,000 a child tax credit. But under the new law now, the place where it begins to phase out if you're married filing jointly is not $110,000, it's $400,000.
Oh.
Plus, in addition to that, the child tax credit is being doubled from $1,000 per child to $2,000 per child.
So basically, the moral of the story is anybody who makes less than $400,000 now gets the child tax credit, and you're basically doubling it.
Exactly.
So a lot more folks will see that tax credit. And then with the AMT and the SALT changes, that's really for high-income earners. Lower-income earners don't really have to worry about that.
You just start having to worry about next year, you're going to start worrying about $130,000.
Okay.
Yeah.
So I'm actually seeing that we're getting some questions on Facebook Live. Carlos, you want to toss me some of those questions for Louis here?
Yeah, there was a question from Vilma who wants to know if she lost her tax documents after moving for the year 2015. She's going back and doing her 2015s.
Here, I'm going to bring the microphone over here. You can stay right here, Louis. I'll be right back. Sorry, say that again. So who is this?
Vilma wants to know if she lost her tax documents, can't find them, what should she do for the year 2015?
Okay, that's a really good question. And a lot of folks who were victims of the wildfire are probably in this same situation. Velma lost her tax documents. So what are the options for people who have lost their tax documents, whether it be due to disaster or simply a move, like in Velma's case?
Well, if you have lost your tax documents, you can get a transcript of all of your wages and all of your income that the IRS has a record of simply by going online and asking for a transcript. Some people can actually get it right away online. Others have to have it mailed to them in the mail. But one of the nice things about, we've had these wildfire losses and casualty losses. One of the nice things is the government is waiving any fees for documents that people need to replace.
Oh, that's fantastic.
Yeah.
Now, I'm guessing, if I'm Vilma, I'm thinking, well, what happens if I get audited by the IRS? And I'm looking over at Raphael here from the IRS over here in the gallery. So what happens then? So I've lost all my tax receipts, and this might be actually a question better suited for Raphael, but maybe you know. What happens if I've lost all my tax documents and I do get audited down the road?
Well, your tax documents will be on the transcript.
My
But if you have personal expenses, you can often get replacements, for example, bank statements, expenses that you paid out of your banking account, or you can get a reasonable estimation. They will accept a reasonable estimation based on your typical pattern and also other records that you can then gather after the fact.
Okay. And since we have Raphael right here, so we don't have to circle back to this when we interview you, why don't I just walk over and ask you, sir? So Velma lost her tax documents. Let's say you guys have to audit her down the road. Is it going to be a lot of work for her to try to recover those?
Maybe, it depends, but what Louis said was pretty much correct. It's facts and circumstances. We'll take a look at things, past, present, future, and see where they are. Unfortunately, like you said, you order the return, you can do that online, irs.gov, the whole thing. There's relief for wildfire victims, and we'll take into account all that, and we're flexible. We can do that.
Okay. Yeah. And if they're not flexible, call me, and I'll call him, and we'll see what we can get done. We'll see how much we can help you. All right, so let's move on to some other things. Itemizing. We hear a lot about itemizing. What does that mean?
Well, it means that you have more expenses that you've paid out in things, as I mentioned, like your charitable donations,
right,
or your state and local income taxes, or your mortgage interest. Some people here in California, we take a vehicle license fee, which is a portion of your registration. That's a form of personal property tax. Or these casualty losses, or employee business expenses, or your tax preparation fees from last year. All of those, if they are added together and they equal more than the standard deduction, then you can itemize and get a greater amount of your taxable income reduced.
Okay.
About 28% of taxpayers nationally itemize deductions on their return.
And actually, we have here we go. Thank you so much, sir. The IRS comes prepared. This is what the itemized deduction form looks like. This is from 2016, your Schedule A. So this is where you would write down, these are my medical expenses, the taxes paid, interest paid, gifts to charity, casualty and theft loss. That of course, this here, line 20 is what the wildfire victims are going to be looking at this year. Job expenses, so if you have a home office, certain miscellaneous deductions, and then other deductions. So these are all things that you can write off, and generally if you're a high income earner, they don't help you a whole lot because you have the alternative minimum tax, but again, that's going to change this year, and you can write off less of this now, right?
That's
because
correct.
of SALT, right?
That's correct.
So so generally speaking, for itemized, you may not even need to itemize anymore.
That's correct. Many won't need to itemize. Not only will that give you a greater benefit, it'll be a cheaper tax return, too, because you won't have to use a Schedule A.
So here's my question. How do I know? Because, of course, we keep every receipt thinking maybe this will help us out, maybe this will, help us when it comes to tax time. At what point do I have to stop keeping receipts because I won't need to itemize anymore?
Well, I personally recommend to my clients, and I do it for myself, I keep my records for 7 years. Some people say 3 years, but then if people oftentimes will get a letter, for example, from the Franchise Tax Board 4 years later. And if they find something in your tax returns from the previous 3 years, then they might go back further to see if there was a pattern there and something might have been missed. So that's why I just tell people to keep your records for 7 years. One of the things we didn't mention on the itemized deductions are your medical expenses.
Right.
In the past, the ability to take itemized deductions for medical expenses, those had to exceed 10% of your adjusted gross income. So a lot of people couldn't take that. Well, they've now reverted to the old percentage, which is 7.5%. And you can, anything over 7.5% that you've paid out for medical expenses now can be an itemized deduction.
Which, I just had a baby. This is my first week back from maternity leave. And I can tell you, any woman who has a baby, at least in the state of California, has a lot of medical expenses.
Right.
I definitely couldn't write them off the first time around with my daughter, who's now 4. This will be interesting. I bet you more people will be able to write off the costs associated with having a child.
Exactly.
Oh, how interesting. Okay, so that's another big change this year. Speaking of healthcare, health insurance. So this year, health insurance is required, or you have to pay a tax penalty, and it's been increasing each year under the Affordable Care Act. But my understanding is that is changing. How?
It's changing because there will not be a penalty starting in 2019 for not having health insurance. Right now, if you don't have health insurance, there is a penalty, unless you qualify for one of the many exemptions that they have for receiving that penalty.
So now, I do want to be clear. If you didn't have health insurance in 2017, you still have to pay the penalty, right?
That's correct.
And if you don't have health insurance today, right now in 2018,
You will pay a penalty.
you will pay a penalty. However, moving forward, as of 2019, you won't need to have health insurance
Exactly.
anymore.
That's right. It won't be required
Yeah, it
by
won't be
law.
required. It's probably still a good idea to have health insurance. Don't quote me on that. But in terms of tax penalties, you won't get a tax penalty if you don't have health insurance.
That's right.
The folks at Cover California would not be happy that I just said that. Okay, so common mistakes. What are some of the common mistakes that folks make?
People use the wrong filing status. I remember when I was a young when I was a young father, and I had my wife and my child. I thought, well, I'm a head of household now. It says head of household, and I'm the head of household. So I filed as head of household, when in fact I should have been married filing jointly. And that caused me to look into the tax code a lot more. Some people can file as a qualified widower. Some people file as head of household. Married filing separately, married filing jointly. What I find is that people don't understand properly in the state of California how to file separately, because California is a community property state, so you really need to look at those particular things that qualify you for married filing separately.
Okay, and then what about common deductions? What are some of the common deductions that folks miss?
Well, one of the things people don't realize is, I'll use the most common thing that I see, and that is young people who are on their parents' tax return, yet they make some money at a place like Starbucks. You know, they make a couple $1,000s a year. They have taxes withheld from their pay, and yet they don't file a tax return. They think that because they're on their parents' tax return, that then they can't file a tax return. But in reality, if they're a dependent, they can file their own return. They just lose the exemption that we have now. And so if they file themselves, they can get that money back. A lot of people miss education credits that they could be receiving, or earned income tax credit. Even if you're a single person, you might qualify for earned income tax credit if you make less than $14,000. So people miss a lot of these things, and that's one of the reasons that we're here, to help people get the maximum advantage on their taxes.
Fantastic. And we're going to talk more about the earned income tax credit when we speak with the Franchise Tax Board coming up here in just a bit. I do want to get one more thing, and I'm actually going to ask all three of you guys this. Folks affected by the wildfires, what do they need to know?
Well, what they need to know is that there's two different ways of claiming casualties. You can wait to the next year's tax return to file it, but that's oftentimes a year away. Or you can go back and amend an existing tax return from the year before. So you have options as far as being able, and what you can do is run it both ways. See, if next year you're not going to have high income and you don't need that write-off as much, you could take it on the year before and amend an existing tax return. And at H&R Block, we have a special casualty helpline where you can look on our website. If you come into one of our offices, we'll put you in touch with people that will give you special resources on exactly what casualties, losses we can help you with.
Fantastic. And if you do have questions, you can go ahead and call right now, 888-5HELPS-YOU. And we've got our H&R Block specialists manning the phone lines. They will be answering any of your questions. You can also post them on our Facebook Live, where we are answering your questions right now. And actually, if you're watching us and we are no longer live, so you're watching this later on today, you can keep posting your tax questions, and H&R Block has graciously offered to continue to answer your questions for the next couple of days. Thank you so much, Louis, for your time. I appreciate it. We might come back to you and ask a couple follow-up questions.
That's great.
But I do want to go over here and talk to Carlos for a moment before we get to the IRS and Rafael. So are we getting any good comments, any good questions that other folks might want answered here?
Yeah, question. Actually, a lot of the questions have to do with the new tax law. People are unclear when it starts. Is it when they do the taxes for 2017, or is it when they do the taxes next year for 2018? So that's a prevailing theme among questioners. Specifically, question from Marie Mitchell about the earned income credit. Does it end at age 65? Yes or no, and why? Question about COBRA insurance. Someone who pays $600 a month for COBRA insurance. W-2 wage earner, can I get some credit? So throw those out there, see if any of the experts want to take those on.
I might ask you to repeat some of those questions. Rafael, can we have you come right up here so that I do know the answer to, we're going to have the IRS up next. Thank you very much, sir. Gosh, I love sitting across from the IRS and questioning you live on Facebook. I do know the answer to one of those questions. The question that we just got was the tax changes. Does it impact me this year? And the short answer to that, sir, is?
Generally, no.
Right. So it's not really going to go into effect until you file your, is it your 2019 taxes?
Correct.
So even 2018, so we're in 2018 right now, and the new tax law doesn't impact what I'm doing today.
Right.
It impacts what I'm doing in 2019. When I file my 2018 taxes in 2019?
Right. So it's one of the things we've been saying for the last few days and probably continue to say. You want to take a look and consider some tax planning for 2018 as opposed to waiting later. Do it now if you can, because 17 we're filing for behind, right? We're in that, not too much going on change-wise, but this new law was so vast. There's so many provisions. There's so much out there that changes so many things for a lot of people. Check things, because you're going to find yourself perhaps, probably, either owing a little more tax than you did or getting a bigger refund. Lewis mentioned a whole bunch of different provisions, AMT, all these things are changing. So you want to bring the taxes you pay closer to what you're going to actually owe by doing what we call a paycheck checkup. And check your withholdings. The amount of taxes that you give the government, if you will, throughout the year is going to change because of this new law, basically. So good time to mention that.
Yeah, so we actually have a graphic for the IRS paycheck checkup.
Cool.
And so you were saying that most taxpayers actually do get a refund, and it's on average around $3,000. But that could change with the new tax law for some folks. And you were saying, the Bay Area, which generally has a little bit higher average income, might be impacted more, right? So this is the time to check your W-4?
You have more wealth here, generally speaking, right, than you do in other parts of the country. So a lot of folks are going to see some changes, and there's a lot more changes than just the basic, the personal exemption went away, the standard deduction was doubled, Lewis mentioned that. The tax brackets have been increased a little bit and reduced by 2% for the most part. Employers are using different withholding tables. There's a lot of changes going on out there. But bottom line is there are so many provisions that are going to affect us all. It's a good idea. Just take a look and see where you are, and do some planning. That way you avoid any surprises when you file next year.
So let's talk about what withholdings mean, like what that means from a more common perspective. So you get the W-4 that you fill out, and I thought I had a copy here, but I don't have it with me. But the W-4 is when you get a new job, you say, I'm going to claim 0, 1, 2, depending on whether I'm single, married, I have a dependent. And that tells your employer how much to take out of your paycheck, how much in terms of taxes to take out of your paycheck to hold for the end of the year. If they take out too much, then you get a refund at the end of the year. If they don't take out enough, then you have to pay taxes at the end of the year. So you want to make sure that you have the right number of withholdings. And I noticed one year my husband got a new job and I didn't change my withholdings, and we ended up paying a whole lot because we were both claiming more than one on our taxes. So it really is important to check it each year. And we always say if you have a baby, if your spouse gets a new job, if you get a new job, then you change your W-4 withholdings. But you're saying this year the tax law, the changes in the tax law is essentially a life change. So everyone needs to look at their W-4 and figure out, should they change it?
Correct. Maybe you're going to get a bigger refund, and you can have that money in your pocket throughout the year, as opposed to waiting till next year and getting it back in the form of a refund when you file a tax return. Well, I'll step back and say taxes are pay as you go. That's why you have withholding. That's why if you're a self-employed person, somebody who's a 1099 independent contractor, perhaps you work in the shared economy, you drive a car from one of the two big shared ride-sharing companies, you want to pay quarterly estimated payments throughout the whole year, keep yourself current. current, because taxes are pay as you go. You don't want to just file a return and then all of a sudden have a big surprise when you file that return because you haven't been paying as you go. So withholding is a big part of that, and that is done through your employer doing that for you, or you're making quarterly estimated payments or quarterly estimated tax payments if by chance you are a shared economy worker or somebody who doesn't have withholding done from their employer. Okay, so that said, the bottom line is, as you're saying, is you want to make sure you take those adjustments if you can and take a look at things. That way you don't have those big surprises. I know I'm being redundant, but it's worth noting because I think it's going to be a bigger deal. And we mentioned the SALT taxes, the itemized deductions, all those things are going to change, and it's just worth noting for sure.
And the IRS does have a W-4 calculator where you can go onto their website. It's irs.gov is where they can find it?
irs.gov, and it's a withholding calculator. And what you do in there is you go to the application. You're going to want a pay stub or two.
Right.
You may want your tax return. Spend about 8 or 9 minutes kind of clicking around on there, entering the information it asks you in radio buttons. It's not going to ask you for any personal intrusive information like an SSN or anything else like that, or your name. It just wants to get you close to where you should be in terms of the amount of taxes you're going to pay throughout the whole year and what you're putting in as of now, so it can estimate and help you avoid that big surprise when you file.
All right, let's see. Do we see it here on the homepage? Oh, Paycheck Checkup. So here we are on the IRS homepage, and you go to the Paycheck Checkup. So this is basically their press release saying, hey, guess what, you should check your W-4. And then you can scroll down, and I believe, so this is what a W-4
and that's been updated. It should be updated for now. We updated it right around February. The new
right.
form.
And you know, I want to take some time to show you this because NerdWallet just did a study and they found 50% of Americans still don't know what a W-4 is. Okay. So it's important that we go over this and we show you. So this probably looks familiar. If you've ever started a new job, you've received this, and you say, I'm single, I'm married, and you add up all the numbers and you decide what you are filing, and it's usually somewhere between 0 and 3, depending on.
Some people put 12 in there, depending on the situation. You might even put more because I'm a salaried employee, we're married, and you're not.
Right.
So I can have more withholding if we file like a joint return taken from me, so you have to pay less in quarterly estimated payments if you have to pay it all. Make sense? You know what I'm saying? Keeps you current depending on your situation.
So you want to update that whenever you have a life change.
And there's the withholding calculator link.
Okay,
right
so you see the word calculator here. We're going to click on that. I tried to do this yesterday, but I needed my tax return in front of me to figure it out. You go to the withholding calculator, and it asks you some simple questions. So are you filing? So let's say I'm married, filing joint with my husband.
Go back and answer no.
And nobody else can claim me as a dependent. And then we'll hit continue, and then you say, okay, so how many jobs do you have? And you're going to answer, between the two of us, 2. You click all these little boxes, and it will eventually tell you, help you figure out what you should be claiming on your W-4.
It's an estimate. It's not going to give you exact. It's going to give you a ballpark figure and give you an idea. It's based on the information you put in. You may owe X. And X is probably going to be more or less than what your taxes may be, which might be Y. So you should maybe consider upping your withholdings or paying quarterly estimated payments or paying a little more to keep yourself current, or you can reduce them because your refund is going to be such and such and so on. So it's try to get yourself as close to 0 as possible, ideally, if you can, because arguably, we don't take a stance on financial planning, but having your own money in your own pocket is not a bad thing. The IRS or Treasury, generally in the last several years, issues $300 billion back in refunds, with a B, to taxpayers who were over-withheld. So when you file a return, it's essentially a reconciliation, if you will. You got all this withholding, you have all these deductions and credits and such. A lot of money comes back to taxpayers. You shouldn't pay any more tax than you owe, no more, no less. You should take advantage of all the provisions there. But at the same time, use this guy here and get yourself current as best you can. That way you avoid that big surprise when you file. And as a matter of fact, I was talking to one of the gentlemen here for H&R Block, really nice guy over there. Named Ray, really cool guy. We're talking about certain things he's been seeing, and he sees a lot of rideshare drivers.
Right.
And they're, you want to get the education out there. Hey, you're making a whole bunch of money doing this, but do understand there's a tax implication. You want to take care of that throughout the whole year and avoid that big surprise when you file a return.
Right. So Uber and Lyft drivers, we're going to talk a little bit more about that when we get to the California Franchise Tax Board, because this year you may qualify for an earned income tax credit. But if you are not paying your taxes as you go along quarterly throughout throughout the year, you might be surprised by how much you owe at the end of the year. So it really is important to have an understanding. And I will say this, all of this is super complicated. And you know, we can sit here and we can give advice, but there is some free help for folks out there who are making a certain amount of money. There's some free help out there. Let's talk a little bit about how folks can get free services. So what's the first?
So 2 avenues for that.
Mm-hmm.
One is online at irs.gov, choosing the Free File program.
Okay.
So if you make $66,000 or less, you can choose IRS Free File. So what is Free File? It's basically a partnership between the IRS, public, private software companies, and I think there's about 12 or 14 of them, to provide electronic filing for free to do a federal income tax return using the software that they will offer to you. So you use irs.gov as a portal to get in, if you will. Click around on Free File, read about it, choose a software provider that you want, and then click out of our site, click into their site, and do a federal income tax return for free. Now here in California, you may have a nominal fee to transfer over to a state return. In Nevada, for example, there is no state return, so it's essentially really free. But you get the idea of what to do there, and it's right there. See, Free File.
All right, so Free File right here at the top of the page.
Right, and we also have something called fillable forms. So even if you make more than $66,000, you can file a federal income tax return for free. Using fillable forms. However, it's more for somebody who knows their way around a 1040 form. It doesn't quite give you the software hand-holding that you get from the software, so a lot easier to use the software, but still, fillable forms is there for you.
Okay, so here we go. Start your Free File now if you make less than $66,000 a year, which might actually be a lot of those rideshare folks and the gig economy folks that we've been talking about.
Yeah, a lot of people qualify for this. In fact, it's like 70% of the country.
Right.
Because if you look at national stats, income levels at the national level are, more commensurate here, arguably than it is here in California, just the state of California, in terms of the amount of income and wealth is here. The other avenue for free help is outside VITA, Volunteer Income Tax Assistance, which has been in the 1971, I believe, the first year, if I'm remembering it right. And this is the IRS partnering. VITA, you can just go to irs.gov/VITA. And this is IRS partnering with community-based partners here in the Bay Area, United Way, Earn It, Keep It, Save It program. And this is $54,000 or less, generally simpler returns. And the TCE program, which is usually operated with AARP. All these community-based partners, the IRS, banding together to provide free, and there's dozens and dozens of sites all around the Bay Area, hundreds around California and around the country.
So this is where actual software that allows you to file yourself. This is basically free tax help.
Right, this is you sitting across from me. I'm asking you questions. You're bringing your paperwork. I'm filing this return for you for free. I'm seeing if you qualify for earned income tax credit, which goes hand in hand with voluntary income tax assistance. So together we're working to do free tax prep to get you a bigger refund based on what's in the law and to do this for you at no cost. Where do you find one? 211 irs.gov here. If you scroll down here, you'll see a little search, a little irs.gov, find one near you, this, that, and the other, right here, locator tool, AARP, right there. The Franchise Tax Board is a big partner. You can find, yeah.
Let's see, 94111.
That's within 5 miles. If you put 50, you might get
much
100
more.
and something results. Yeah.
So now I do want to point out this is it's 55,000 a year is the income threshold. Is that correct? 54,000.
Generally speaking, and simpler returns.
Right.
You know what I mean? So we're not going to do too complicated because they're not trained to do something that is too
If you have a
complex.
side business, it might be a little difficult. But I do want to note that also folks with disabilities or limited English speaking also qualify, easy for me to say, for this free tax prep. So maybe you have a neighbor, an auntie, somebody who falls into one of these categories. It might be helpful to have somebody actually help them with their taxes and look over their taxes with them. And this is from the United Way, the IRS, and California Franchise Tax Board.
Here in California, up here, United Way is a bigger partner, but throughout the country, sorry to interrupt you,
right.
There's so many community-based partners we work with. It's really a nice program. So
yeah, so here in the Bay Area, it's United Way who we often work with to do stories, and they have these tax help centers all over the Bay Area with folks who can actually help prepare your taxes.
I believe their URL is earnitkeepitsaveit.org.
That's right, or you can call 211.
There you go, 211.
So I see Carlos giving me the eye over there. I know we have a ton of questions on Facebook. You want to holler some out?
Maybe a quick one. Taking care of a mother who's infirm, tax deduction.
So,
Taking
sick
care,
parent.
taking care of a sick parent
Okay.
at their house. Tax deduction, yeah or nay?
Possibly.
So, yeah, so if somebody has a sick parent at home, is there a tax deduction for that?
Possibly.
And what
There's a credit, credit for the elderly. Oh, geez, Lewis, help me. What's the name of that credit? The credit for the elderly or disabled. Yeah, there's a credit for that as well. And then if a qualifying relative, if you provide, there's a test for support, you can take a deduction there. The medical expenses for that may be something you can take as well. So there's lots of stuff you can put on your taxes for that. Yeah.
Perfect. I'm going to walk back over so that our folks at home can hear Carlos. What else? Credit for elderly or disabled. All right, sir. And
Yes. Well, somebody calling herself Ann Makovic, KPIX5.
I don't know who that is.
Who knows? Yeah, who knows? Digital credit card statements, when you're using these digital credit card statements,
Listing purchases.
how important is it to save paper receipts when
Good.
calculating write-offs?
Right, that's actually a really good question. Can I just print out my credit card statement and submit that as a sort of, here's my evidence that I spent this for my write-offs? Yeah, that might be.
Substantiation is good. No matter how, if you're putting something on a tax return,
Right.
you want to have the substantiation on there for it. Whether it's a credit card statement, if it supports what you're doing, whether it's receipts, whether it's copies of receipts, scanned copies of receipts. If you're putting information on your return and you're asked about it, if you have that substantiation, then you know it's going to, well, you don't know, but you hope it's going to stand up as long as it's legit. If it's legit, then you should be okay.
So I've had CPAs, several CPAs tell me, and my husband, for personal business expenses, as long as you use just one credit card, you can just submit that, and that gives you all of your expenses. But if I got audited by the IRS down the road, you would want the actual receipts for each of those purchases, not just the credit card statement stating they were made.
You might want both in case you're asked. Depends on the situation of the audit, depends on the person who's presenting, doing it, you're sitting down and working with. It's hard to give a black and white answer, but the answer is yes to that.
The answer is yes, and keep as many receipts as you possibly can.
I always make a joke, and if you're going to deduct gambling losses, you go to the track a lot, and you're going to deduct your losses, and you can do that up to your winnings. You might want to make sure that the tickets don't have footprints on them. Because if I'm sitting across from you as an auditor, I'm saying, well, what do these have? You pick them up from the ground. The bottom line is you want to make sure it's substantiation that you're spending expenses that are real, and present your side. You have every right to present your side in front of an IRS person who's looking at your return. No question about it.
Hopefully you're never audited, so you don't have to worry about it. All right, Carlos, what else do we have? Any other great questions?
Earlier we got an email question. My mom is 95 years old, totally infirm. Her income all from pensions and Social Security. Do we need to file taxes for her?
So elderly, sick mother, totally infirmed, you have to file taxes for Social Security and Medicare.
Generally speaking, if your only income is Social Security, you don't have to file a return. That's the general rule.
Oh, pension as well.
Depends on the amount of the pension. If it's a certain amount, perhaps.
Can you give us an idea, ballpark of?
There's a formula. It's 32,000, 44,000. I can't divide it by half. There's a formula for that, and I can't think of exactly what it is. But like I said, generally speaking, if you have Social Security income, maybe a small pension, chances are you don't have to file a tax return. That's the best way to generally put it.
Okay.
You could find more here in terms of what that is, but off the top, I can't think of what the exact formula, the exact amount.
Gotcha.
Before it becomes a taxable event.
H&R Block actually manning our Facebook page, and they will be replying to your questions. So whatever we don't answer here today, you can just look in the comments, and H&R Block will be getting back to you probably with that formula, I assume. Carlos, do you have anything else for us that we should answer before I move on?
Quick,
Let's go back over.
Law practice organized as a sole proprietorship under the new tax law, which, as we've been saying, not until next year, but anyway, better off organizing as a corporation versus a sole proprietorship?
So the C
Ooh,
Corp
good
versus
question.
S Corp question. The law changed. The C Corp, I believe, was dropped from 37 to 21%. And in the S Corp, I think you get a 20% deduction for amounts over $315,000, whatever that might be. So that's part of the tax planning thing. You might want to sit down, or this person might want to sit down and see if it's better to change your structure from a C to an S, from an S to a C based on this new law. And it might be beneficial for some people to do that. How that works in terms of your specific set of facts and circumstances, it would be it behooves you to sit down with somebody who knows a CPA to help you see what might be beneficial in terms of your taxes, if that kind of makes sense.
That's probably worth talking to the experts about your individual case.
That's a common question I've heard because of what the new law offers.
Some of our comments, and H&R Block has already responded to a couple of commenters because their question is so specific that it's hard to give a straight answer to encompass everything that they might be talking about. So they've recommended maybe come into H&R Block or whatever and talk about that specific.
And one more thing about the new law, it's really important to note, is that law was an enormous, vast amount of legislation that changes taxes as we know it going forward quite differently as we've seen in the past, right? So our implementation of it, our guidance is not going to come out tomorrow. It's going to be days and days and weeks, if not longer, before we put out policy guidance, the interpretation of that legislation that people want to know about how to act and do what they're going to do, waiting for us to do that. But it just we're working on it as fast as we can. And we have a page up here. In fact, if you go back to the home page here, I'll show you real quick. Just scroll down. Keep going, right here. This is the latest information as we put it out, policy guidance. Yeah, and scroll down a little bit, you'll see, here's the news releases. If you scroll down further, you'll see all the different frequently asked questions, the publications, and then the legal guidance. And so, I mean, this page is where all this is going to live, and it's not going to come out. It's going to take some time. That's the bottom line. Yeah.
I'm certainly not going to scroll through this and try to figure it out myself. But I mean, if I'm a viewer at home, it's one of those things where you probably do need to get someone to help guide you. I do want to note, once again, you can call 888-5HELPS-YOU. We do have folks from H&R Block here answering the phones. In terms of H&R Block answering the questions, of course they're going to say that you may have a specific situation, so they can't answer everything, or they would say please don't use this as advice. But I'm hoping that they will be able to give you, for instance, what the cutoff is. We're talking about certain calculations, and hopefully H&R Block can provide those responses in the comments. And if not, we can go back later and look at those and try to give you more information over the next couple of days in the comments of our Facebook Live.
One more thing we have, if you go to irs.gov FAQs, you could type in certain questions. Okay. Is my Social Security income taxable? Boom, it'll tell you. It'll show you that formula. It'll be there. In other words, the bottom line is you want to use this as a resource and get some information here. It's really easy to understand. It's written by people for people. It's not going to be in some code section kind of thing. And it really helps you understand. So you get the idea.
Real quick, I do want to reiterate, so the tax code, the law does not impact your 2017 return. Generally speaking, which you are filing right now. But it will impact your 2018 return, which you won't file until next year.
Right. That's pretty much generally true, and that's why it's good, as we mentioned, and I won't beat it anymore. Take a little time to consider some planning. Yeah.
Because if you haven't changed your W-4 withholdings right now, you may already be either taking out too much or not enough.
You may not have to. And people have said, I looked at my statement, and I'm getting an extra few more bucks because of the new law, this, that, and the other, which is great, and that's good. But as a whole, take a look.
Got it. Yeah. Real quick, what if I can't pay, and what do I need to know about extensions?
Extension of time gives you 6 months through mid-October. You can electronically or the paper form. The extension of time is to file and not necessarily pay. So if you owe or you think you owe, April 17th, which is the deadline coming up here in less than 3 weeks now, is your deadline to pay. If you can't full pay, you have a requirement to file, you can't full pay, do file the return, because the failure to file penalty with a balance due is 10 times greater than not full paying. And if you can't full pay, that's fine. Let us know. File the return. Let's work out an installment agreement. Let's work out a short-term plan, a long-term plan, whatever it takes. We have the flexibility to do that. But certainly, you don't want to sweep it under the rug. If you have that requirement to file and you have that balance due, it's much better, less penal, if you will.
Simply file and not pay, or pay $5 and then figure it out from there.
But most returns are refund returns. So if you just pass on that, then you're letting the government hold your money, as opposed to filing a return and getting it back.
Now, I do want to note that even if you get an extension, it doesn't mean that you don't pay. If you file an extension and you don't file your taxes right now, you still have to pay, and you'll be paying penalties on whatever you owed, if you owed.
You may have penalties and interest that accrue on the account, but the extension gives you the time to file, not necessarily to pay. So if you owe or you think you owe, consider a payment. That way you avoid any accrual, if you will, of more money that you have to pay than you owed to begin with.
All right. Thank you so much, sir. I appreciate it. We're going to pause for a second and remind you that you can call 888-5HELPS-YOU. You can post your questions on our Facebook Live, and we've got the folks from H&R Block answering those questions. And next we have Jason Montiel from the California Franchise Tax Board. Thank you so much. And we're probably still going to ask you a few more questions over there, but let's go ahead and pull up our Facebook Live here. I wonder if I can get the Facebook Live back up so I can see some of these questions. Okay, so yeah, again, if you're tuning in now and we're not live right now, you can still post your questions. H&R Block says that they will be continuing to answer questions in the comment section of this Facebook Live even after we go off the air. And I am hoping to see if I can get this guy up. It says we need a flash player. And I don't think that I can download a flash player on live Facebook Live, so we're just going to keep moving on and let Carlos feed us the questions. Yeah, there you go. The beauty of, I keep wanting to say the beauty of live television. Okay, so Jason, live on the web. Thank you so much. I actually worked with Jason at a TV station in Sacramento years ago. So good to see you as well. So let's start off by talking about the Earned Income Tax Credit. And, you know, we've already been getting questions, I noticed, about this. So first of all, what is the Earned Income Tax Credit, the Cal Earned Income Tax Credit, and what do we need to know after, following the new tax law changes?
Well, we'll talk about EITC in general. Basically, it's got this big long name, Earned Income Tax Credit, but what it is a way for low-income families to boost their refund. It's extra money that they can get back. Now, as IRS mentioned, the federal EITC has been around for a long time, since the 70s. We're only in the third year of the California Earned Income Tax Credit, and that's a supplement to the federal. Basically, if you qualify, you can get both. And when people hear tax credit, sometimes they think, is this money I have to pay back? No, it's not. You get this money. If you qualify, it's free money. You can use it for rent, for food, for whatever you need. And so we want to kind of get that out there to start with, because people might be confused about it.
And so the income threshold is if you earn less than $22,300. I think we have a full screen graphic for this. You qualify for the California EITC, and you can actually get an extra $6,500
between the two. So, and then when it comes to the federal EITC, if you earn $54,000 or less, you may qualify. There are other requirements, your number of dependents and a few things like that. But basically, we want to get the word out. On the federal side, if you earn $54,000 or less, you might qualify for the federal EITC. On the California side, you might qualify for Cal EITC. If you make that $22,300 or less, you may qualify. And so
it's free money that basically you get back.
Exactly. One of the things, Julie, we're trying to do is get the word out to people who have never had a filing requirement in the past.
Okay.
Someone might say, I don't earn very much. I don't file my tax. I don't have a requirement to file my taxes. Those are the very folks that we want to reach out to and let them know about both of these credits, because they might, if they don't file, you have to file. That's the only trick.
Right.
You just have to file. And so you want to file so you can get this money. If you don't file, you're maybe leaving money on the table, as much as $6,500.
So we're talking low-income earners, we're talking students, we're talking ride-share or gig economy folks.
Exactly.
And actually in the past, there is a change this year, right? In the past, if you were a ride-share type, if you had a ride-share type job or a gig economy job, it didn't qualify
toward the California Earned Income Tax Credit. So the big changes are this year with the California Earned Income Tax Credit. The governor and the legislature last summer expanded the California Earned Income Tax Credit. And so basically the threshold for income went up, so $22,300 or less, you might qualify. And now, for the first time, self-employment income can be used to qualify for Cal EITC. So here in San Francisco, I see all these ride-sharing drivers driving around town, downtown here.
Yeah,
they might qualify, so they may want to look into it. Now, taxes are complicated, and already we've talked about getting tax help. You can always get some help through your software. If you're using software, the software will walk you through it.
Okay, so talk about getting help. There's a lot of free help out there. We spoke about it earlier with the IRS, but I want to bring it up one more time. So there is free tax help, places you can go to actually get your taxes done for you, right?
Right, exactly. I want to piggyback a little bit on what IRS said about free file. On the FTB side, we have something called Cal File, which is very similar. It's software on our website where you can file for free. It's just called Cal File. and you can go and basically within about 15 to 20 minutes you can get your return done, and it's free, and you can go ahead and oh, here you go.
California Franchise Tax Board. Okay, so the important thing to note is you have to get the free software. You have to go to both sites individually. You file your state taxes for free here at CalFile. You file your federal taxes over on the IRS side on their website, irs.gov. But either way, you can file yourself for free, or you can go to the, what is it called, the VI?
Volunteer Income Tax Assistance, or VITA. I love VITA. I'm a VITA certified volunteer myself. I've gone through the training. VITA volunteers are awesome. Basically what it is, there are VITA sites available all around the Bay Area here. United Way here in the Bay Area, they are wonderful. So again, you can call 211 here in the Bay Area to find a location near you and set up an appointment. So the way VITA works is you find a location, you set up your appointment, you gather up all your tax documents, your W-2 and everything, and you show up, and someone like me, a VITA volunteer, will sit with you and walk you through your federal and state returns. They do them, basically you're sitting at a computer like this, and they go ahead and file them right on the spot. It's all done electronically. Oftentimes you're in and out within an hour. So VITA is a really great way to go for folks. And the only requirement there, again, they had mentioned it already, it's important to note, $54,000 or less, you can qualify to use VITA.
Okay. So folks at home might be saying, so can I do it myself, or should I try to find someone else to help me? Should I hire, say, a tax preparer? What's your recommendation?
Well, a lot of times you can do your returns yourself. If it's a simple return, there's lots of software out there. There are the free options, of course, offered by the IRS and by FTB to go ahead and do it yourself. If you just have a W-2 or an interest statement, you can do it. The software walks you through, and it's pretty quick. But if you have a business, or maybe you retired some debt during the course of the year, or you just have a lot of investments, you may want to consider looking for some help from a professional preparer.
What about rideshare folks or gig economy folks? I mean, that seems sort of complicated because you do need to pay quarterly, right?
If that they might want to consider looking at a preparer. It could be a little bit more complicated. We're first to admit taxes are complicated, and there's no shame in asking for help.
Okay, so let's talk a little bit about the wildfire victims. A lot of folks here suffered property damage, lost their homes due to wildfires, and some, couldn't access their homes. So there might have been, or businesses, so they might have business losses due to the wildfires. What do folks need to know from a state tax perspective?
From the state side, we do offer help for disaster victims. And if you go to the FTB website and type in the search field disaster loss, there's a casualty loss situation where you can declare that on your return. And basically, you go to the web page, and this is another case where, in the case, for instance, in the wine country, where we had the Tubbs fire, and all these other horrible fires last fall, people may want to go and look at our website to see if they can go ahead and declare a disaster loss. Now, because the governor declared an emergency for these big fires in the wine country, people have an option whether or not to declare it on their 2017 return, or they can go back and amend on their 2016. The reason is and this is where you will probably really want to talk to a preparer, because they know your financial situation better, and they can tell you financially, because of your income on certain years, it might make more sense to declare it in 2017 or 2016. So what we really recommend, we tell people, go to our website and look up disaster loss, and then once you digest that, go ahead and you might want to ask for some help from a professional preparer because that person is going to know your personal information better than anyone. The other thing to consider on this disaster loss page, for these poor folks that lost their homes in Santa Rosa, they might have lost their tax documents. If you reach out to FTB, in those cases, we will provide those for free. So you just need to call us. You can call us at 800-852-5711. That's the generic FTB number, and we will provide copies of those for free. They already have enough going on just getting back on their feet, and so we feel this is a way to help out.
So what do we need to know about the April 17th deadline this year, tax deadline? We get a little extra time, right?
Right. And Everyone gets 2 extra days because basically April 15th is the traditional day, but it falls on a Sunday. And then in Washington, D.C., they follow Emancipation Day. IRS does. IRS is closed. And so we just all decide, let's go ahead and do it on April 17th. So the good news is everyone gets a couple extra days. So you get a couple extra days to kind of dig out your documents and look around.
Okay, well, that's good to know. What are some of the scams that we need to be aware of this year? And we're going to go to, I was just going to let Carlos know, we're going actually to 110, I believe. So we're going to be on, excuse me, 210. 210. We're going to be on for another 14 minutes or so. But what I do want to ask is, what are some of the scams that we need to talk about this year? So every year, I mean, that's sort of my bread and butter, right? That's the ConsumerWatch beat is tax scams, and we all have been getting. Actually, if you're watching right now, you probably received one of those calls. This is the IRS. We're going to come arrest you unless you send us money. What do I need to know?
Okay, if you get those calls, basically what's happening is people's personal identification, personal information is being stolen. Socials, names, addresses like that. And then the scammers take that information and they file bogus returns in your name in an attempt to steal your hard-earned refund. And what they do is they try to file early in the season often to try to beat you. And so that oftentimes people go to file and then a red flag shows up at FTB, hey, someone's already filed on behalf of this person. We will work with the taxpayer to let them know, hey, it appears you're a victim of a scam, and we'll work it out with the taxpayer. But basically, people need to be careful with their personal information. We can't say it enough. When you get these calls, and if they're threatening you, they're saying, I'm on the way, and I'm going to take you to jail, and the police are on the way, that's a scammer. Now, with FTB, if we need to get a hold of you, we will send you a letter by snail mail. For instance, if you file and, for instance, we have a question about your return, we need to clarify something, we will send you 1 letter, 2 letters, sometimes even 3 letters before we call. And then when we do call from FTB, we will identify ourselves as being from FTB. We'll be very civil and professional. No threats.
You'll never arrest them or,
no, nothing like that. And so, and we take a lot of pride in that because we're taxpayers too, and we try to treat people with respect. Okay, and so if you get a call from FTB, we will treat you with respect.
Are there any other tax scams that we need to know about?
Well, I'm
going to grab Raphael, or actually I was going to see if Arlette wanted to come over, but we'll grab Raphael. Okay.
I might actually defer over to IRS on that.
Arlette, would you like a little on-camera demo? My old friend Arlette, who actually joins us often on our newscasts. She's our local investigator. And what are some of the, let me stand up over here. What are some of the tax scams that we're looking at right now? I know last year, here's a microphone for you. I know last year there was an issue with scammers contacting company HR departments and asking them and pretending to be, their vice president or president saying, hey, can you send me over all those W-4s? And a lot of people were compromised because of their employer.
Right. So this year what we've been seeing is, so as a result of a lot of those breaches from last year where taxpayer information got out through different companies, a lot of those tax returns are now being filed. And so one of the latest scams we saw that just started this filing season was you would have, say, a taxpayer's information was breached, a return was filed, they used all the information that was contained in that taxpayer's file at the return preparer. So, for example, the address, the W-2, the bank account information was all identical. So when that tax return gets filed, there's no flags in the system, at least from the IRS's standpoint. So the refund goes out, it goes into the bank account of the taxpayer. The taxpayer then gets notified by the bad guy to say, hey, a refund was issued to you in error. In this particular case, we're seeing they're posing as a debt collection agency and saying, okay, you need to send us this refund back. And we did see quite a bit of those. We looked at the website that they were using, and I can send you sort of a page of that website, what it looks like.
And we can go post it in the comments.
You can post it. That isn't active anymore, which is good. And within a few days of the filing season opening, we started to see this happening. And so, so really from the IRS's standpoint, just protect your information. In that case, those look like they're coming from tax professional breaches. But as soon as you're aware of a breach, get in touch with the IRS, notify them, and get your paperwork done.
And it's important to go to irs.gov and find contact information there. Do not use the contact information that somebody allegedly from the IRS tells you over the phone or sends you in an email. The IRS will never call you and will never email you, well, almost never call you or email you. And if you do get a call or an email from the IRS and you really do think it's them, hang up. Go to the irs.gov, find the contact info, and call them just to confirm, right?
Correct. And the thing to always remember is, because I'm with the criminal division, we do sometimes call, we do sometimes email, and sometimes we actually show up at your house. And we're real, but we're never going to demand payment, and we're never going to sit there and ask you for personal information.
And if you show up at my house, can I still go inside and log on to irs.gov and call someone to confirm that you really are who you say you are?
If we're at your house, depending on the circumstances that we're at your house, maybe, but oftentimes not. We're going to ask you to step away from the computer.
Okay, fair enough.
Okay.
Fair enough. But you probably would already know that you've done something wrong and that there's a reason that the IRS is at your house. Right. There was another tax scam last year that I'm trying to think of right now. There was the employer one. Are there any other big tax scams that we need to be aware of in terms of, folks trying to siphon off money? I know you always say file early so you can beat the scammers. Anything else that we need to be aware of?
Identity theft in the past was really, really a big deal, and there was all different sources for the information being filed with taxpayers' information. But we actually have seen a decrease, and I think it's because of the partnership between the IRS, the state tax agencies, as well as the industry. And so
folks are looking at it. Oh, we've got the dirty dozen. Oh, I remember one of the big ones last year, towards the end of the year, was emails from tax preparers. So, for instance, I would get an email from my accountant saying, Julie, I need you to send me that W-2 document. Can you please send it back to me? And so I would reply and send it back, and it turned out that my tax preparer, this is an example, it didn't happen to me, but that my tax preparer's email had been hacked. And I was actually replying to a bad guy, sending them all of my personal information. So we heard a lot of those sort of complaints last year. Is that still going on?
It's still going on, and the problem is what people don't realize, and always remember, don't respond with personal information in an email. So if you get an email that's supposedly from your tax return preparer or your boss or whoever asking you for information that you normally wouldn't be providing over the phone, or if you're unsure of who this person is, give them a call, because a lot of times we find out it's not them. And also sometimes when you click on the name in the email, you'll see that it's masked. It's not actually who it says it's from. So just always question when someone is asking you for information.
And, it occurred to me, of course, after I did my taxes via email with my tax preparer this year, that I hadn't been as diligent about it. And I knew that we had been talking on the phone, so I knew she was sending me these emails and I was expecting them. But it's easy when you're busy, you're doing 100 things, you've got to get those taxes done, deadlines approaching, to sort of be complacent and say, reply, yeah, sure, here it is, and not stop and think, wait, make sure I'm sending this to the right person. Thank you so much for filling us in on these scams.
Sure, you're welcome.
And there's a lot of, some of the dirty dozen was the phone scams, there's the fake charities, there's inflated tax refund claims, a lot of, the IRS calls them the dirty dozen tax scams, but there is no shortage. Bottom line is, when in doubt, go to irs.gov or the FTB's website and call the number there to find out if these folks are in fact legit. And don't give your information to anybody via email or phone unless you've called to confirm that the person is who they say they are.
Correct. That's all very true.
And one of the things at FTB, if you think you've been targeted by a scammer, reach out to FTB as well. We have a link right on the homepage of ftb.ca.gov, and you can go ahead and report the scam, reach out to us, and also we have a whole list of scams that are occurring right on our website. So let FTB know as well.
Okay. So let's see, April 17th, we spoke a little bit about this with the IRS, but if somebody can't file by April 17th, what do they need to know?
Okay, so if you can't file, one of the things is if you owe, that's the date to file if you owe. Okay, everyone in California gets an automatic 6-month extension to file your state return, so it's mid-October. You don't have to do anything. You can go ahead and take advantage of that. But if you owe...
So if I don't have to file on the 17th, I can wait until October?
Right. You
but
can't...
state, not
but,
federal.
well, no, for the state, if you owe, You need to file.
Okay.
But if you, say for instance, you can't get all your stuff together by the 15th and you know you're going to get a refund, you can go ahead and take advantage of that 6 months. So thanks for clarifying there. So, but you do, and if you find that you do owe, and you owe the state, you want to reach out to us to try to set up an installment plan. If it's $25,000 or less and you can pay it back within 5 years, we will work with you. In fact, you can set up an installment plan right on FTB's website. You don't even have to talk to anyone. But the thing is just like homework or bills or something, you don't want to ignore it because you don't want to kind of face interest and penalties down the road. If you find yourself in a bind, just reach out to FTB.
Okay. And I want to note the phone lines are still open, and we're going to actually keep them open until about 2:30. So if you have a tax question for H&R Block, you can go ahead and give us a call. That's 888-5HELPS-YOU, the letter U. And those folks are standing by to answer your questions. And Jason, before you get up, I do want to walk back over to Carlos and see if we've got any more questions that we can ask these guys before we tune out. Anything that we haven't answered? I know you threw a couple of it at us before.
Gentleman appears to have an issue with his mother who died and a probate lawyer. The question is a little garbled, but
it's a little complicated, I think.
Is there some words of wisdom that we give this gentleman who's dealing with death of his mom, probate lawyer, case number to the will? I couldn't really glean the exact question, but any words of wisdom that we might send his way?
So yeah, if a parent passes away and you're left something, is there anything that you can help advise?
Really, because it's such a specific case, I don't have anything. My advice might be to talk to a professional preparer in that case because they could really look into all the details.
Okay. Well, I know we have a lot of questions out there and some that you may not want to post on Facebook or that may be too specific. So if you do have a specific question like that, you can go ahead and call 888-5HELPS-YOU. And we've got folks standing by. And if you do have more general questions or if you have a way to sort of phrase your question a bit more generally, you can post them in the comments of the Facebook page. We will be signing off here, but you can continue to post your questions for the next couple of days, and H&R Block will continue to answer those questions. And we'll also be posting some tax tips and some links in the comments of this Facebook Live. So feel free to come back and check in over the next couple of days, and we'll post a lot of information here for you. And feel free to share it with your friends and family. Thank you all so much for being here. Jason, Raphael, and Louis, I really appreciate all of your expertise. And yeah, until next year, signing off. Have a wonderful day, guys. 888-5HELPS-YOU. Give us a call.